The S&P 500 1-minute chart for the 30th shows right at the last minute somebody or some miracle happened. It would be hard for me to believe that that was a coordinated worldwide effort to bump the S&P 500 up in the last minute. But you can see the last 3 minutes before that last minute that the index was under 4016 here and was flirting with this price flip to the buy setup one count. All it needed to do was close under 4016.22. Look at that number. Is at 51 million shares in the last minute. That's hard to believe that one person could do that. But whatever, it saved the day for the S&P 500 to live another day in the sell setup count. And I've been getting the data very late in the evening for the end of day, so we'll just nix the DeMark indicators in the daily chart and just take a look at where the level for the flip to the buy setup one count is for tomorrow. So this is the 30th, so let's count the 30th as 1, 2, 3, 4. So it's not much different than today, where 4 bars back was 4016.95. I've changed it in the big board chart to the 31st, 4 bars back. So stay above 4016.22, and the sell setup 7 count will print. And then for Tuesday, it's got to get back above 4060.43 for the end of day. And if it doesn't do that, we'll have the price flip. If it does somehow make it back above that level and print the sell setup 8th count, then we have the Powell presser on Wednesday, and Wednesday would need to stay above 4070.56. So again, this is really getting tight here. The NYA top caller chart, we'll take a look at the NYA to SPX ratio, value versus growth, to see that it got turned away from the top of the ascending triangle here and is headed back up. So let's give it some time to see if it turns around and comes back. There's a knee-jerk reaction before the Fed meeting. So let's see what happens after Powell speaks and how the market reacts after that. And I started looking for the top collared famous divergence, similar to over here right before the Kaplan cheating V back then in August 21 or so. And you can see the NYA to SPX ratio is drastically pointed down. The NYAD, which is the most important one of the 4 indicators I'll show you here, is not such a drastic trajectory down as the NYA to SPX and the New York McClellan breath oscillator here. And then price was pointed up over here. So let's try to draw it here. So a little bit of a trajectory up there. McClellan breath oscillator down. AD line pointed squarely up. And the NYA to SPX ratio pointed down, so no top calling divergence. And back by this one before the Kaplan cheating V, you can see when he came out and spoke how it went down, but that wasn't that big of a downdraft, and then it went right back up to create this V. So all of these have to be kind of uniform in their trajectory, and it's this one, the most important one, that really wasn't pointed down as much as this one and that one, and price too pointed up the other way. And every once in a while I reminisce on the big daddy of them all, top color divergences, that really saved my wallet back in 2018. So you can see the NYA to SPX ratio, and especially the New York McClellan breath oscillator and the NYAD, which is actually the most important one. But look at that, all uniform in their trajectory, pointed down, and then price had the same trajectory, just about, maybe a little more, but pointed up. And you can see that the trajectory for price was created by it going parabolic starting in September, middle of September, and it just went parabolic to here. And then when we noticed this, and Tom Espray was the one that created this chart. Thank you, Tom. Get a chance to go over there to the Viper report. He's doing some great things over there. And like I said, look at that. It really saved my butt. We were letting loose of a lot of securities up here. Didn't necessarily short, but anyway, it was a great thing to lighten up here. And then all the way into Christmas Day, I remember that I was alone at work on duty, just a warm body in a seat, and watching the bouncing ball just going down, down, down. And then I bought like crazy on Christmas Eve. I figured, well, I'll give myself a Christmas present. And boy, was I glad I did. Yeah, I'll never forget that. On Christmas Eve, it was the last 1 or 2 minutes of the day, and I was still watching it sinking, 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 and then all of a sudden it had these increments up. I was watching it on the 1 minute chart, maybe 5 minutes before the close, and it was just these little increments going up, up, up for about the last 4 or 5 minutes. And that's what made me decide to just jump in right then and there. The NDXT NASDAQ 100 Technology Sector Equal Weight ETF. Let's continue studying this bottoming diamond pattern. As I noted in the previous video, I'm taking this right out of Bulkowski's book. So further reading in the book says that a 5% failure could happen. So what he means by that is that when it breaks out and doesn't reach more than 5% or higher than 5%, and comes back to the breakout point, that there's a possibility of a move more than 20% or close on the other side of the diamond. And just by eyeballing it, that would put it on the other side of the diamond before it hits 20%. So the number we're looking for to the downside is the low of this breakout bar. 6216.53 is where the bottom of the 5.1% measure is there. And this diamond pattern could have been drawn out a lot further up to this high, as you can see. And it went right along the tops of these, along the bottom of these two, and then connects with the existing line here, but I bolded it in blue. And the way I figured it, by drawing this thin red one here, is that it is more realistic to the measure rules up here. 50% targets, and the happens to be next to the retracement for DeMark. Same thing up here, and here it's just more realistic in this day and age, to let alone make it past the 5% failure zone here. So the NDXT did close below its 200 simple moving average, so let's keep an eye on this 5% rule here. And the NASDAQ composite high-low chart bears watching as it's hooking around here, meaning the 5 EMA is hooking around, maybe meet the 10 EMA and cross under that before it gets down to rock 12.0 down here. So that bears watching there, and we'll keep an eye on that. And I would say if things don't go well after the Powell presser on Wednesday, that's when it will probably cross under the 10 EMA in red, meaning the 5 crosses under there. You can see that the high-low 10 simple moving average, you can read about it here, is in dotted up here, and that's already rolled over here. And the short-term KST is getting near zero also. I have found that the short-term KST up here is similar to the rock 12 down there. You can see where the lines intersect here, right around zero or above it when it fails. So that's similar to the rock 12, and the intermediate term KST is still climbing and not reached some of these higher peaks here. However, the long-term KST is getting up in the nosebleed area there, where it's near this prior peak, maybe a little bit more to hit it, or start rolling over soon. So if it really does give the signal for shorting, you have to stay nimble on this one. It might not make it down very far, maybe just something like this and then hook around. But it is a money-making opportunity, even if it is in the short term.